Hello everyone and welcome to our next technical analysis review for the Euro US dollar pair. Today is March 28, 2012 and we are currently looking at price action on our 10-minute chart. And although we had a strong movement earlier to the downside, you can see that today's trading session has ended flat and we're right where we began, and the market paired some of its losses from earlier. So this is really a picture of just the indecision within the Euro US dollar pair. But despite all of the uncertainty in the market, the pair had managed to only form an intraday high and low of about 96 pips. You can see that the high was at 33.74 and our low for today was at 32.78, and the pair had only managed to trade within a range of 96 pips. So this is really quite low for this currency pair, and it's just really another indicator of just the market indecision and uncertainty in the market. So of course the pair has been trading in a range bound pattern, and we've been in this range, and right now price is currently consolidating below the 100 SMA line, and we're awaiting the breakout during the Asian trading session. So if you were looking for a particular trade setup for today, then you could have entered the market when the bias was strongly bearish during this fall. But you also could have entered when there were signs of a trend reversal, and that would have been around 6:30 a.m. Central Time or 7:30 Eastern Time. You could have placed a short order upon bearish confirmation around 33.50 and took your profit when price reached our daily pivot point at 33.37 for about a 13 pip trade. So then that was one option you could have done, or you could have held out on your trade. You could have been risky and held out on your trade until it broke through our daily pivot point, and you could have actually took advantage of the increased downside momentum from the lower than expected durable goods numbers that came out earlier. We had some poor or just lower than forecasted durable goods number, and that caused momentum to increase to the downside. So then you could have took advantage of that and traded this pair all the way down to psychological support at 3,300 for about a 50 pip trade. So then that was just one trade entry, but two options you could have used for your take profit. But if you were looking for another opportunity to re-enter the market again on this bearish trend, then you could have done so on the pullback to this resistance at 33.26, and you could have entered a short order around 33.20. Now, there were two places you could have closed your trade and took your profit, just like in the previous trade example we showed. You could have actually taken your profit again at the 3,300 psychological level for about a 20 pip trade, or you could have kept your order open and closed out your trade when price reached this 23.6 Fibonacci retracement level at 32.81 for about a 39 pip trade. Now, if I move to the 8-hour chart, I'm going to show you where that 23.6% Fibonacci comes from. It came from this rally that began during January, at the January low at about 26.24 all the way up to this February high at around 34.87. So then this rally here, the Fibonacci retracement of this rally is what formed this 23.6 Fibonacci level, and on today it served as support for the pair. So then you can see that price stopped here, and at this support at around the 32.80 zone was where the buyers began to flood the market, and we saw this retracement take place, and the pair began to push higher. It began to move up throughout the European close and during the remainder of the trading session. So then even during this move upward, there were plenty of opportunities to actually go long and buy on dips or pullbacks in price. So you could have done that, but of course you had to be careful. Keep your stop loss tight and make sure your take profit was tight as well. Or you could have held out onto it and brought your pulled your take profit out, or sorry, pulled your stop loss down further. But that's it for our technical analysis review for today. Of course, right now we're waiting for in what direction the breakout will occur during the Asian trading session. And that would be it. But of course, for those of you that are VIP members, we will be having our next webinar on tomorrow at 9 a.m. Central Standard Time or 10 a.m. Eastern. So if you can join us, we would love for you to come And if you have any questions, bring them to the webinar. But that's it for our technical analysis review for today. And I will be talking to you guys later. You guys have a wonderful day. Okay, bye.